Ladies and gentlemen, hello and welcome to yet another episode of the Age of Alternates. In today's episode, we have Manu, an advisor to the advisors on the call, and Vineet, a manufacturer and fund manager. Vineet is the founder of Vivriti Group, which manages over 7,000 crore in mid-market credit and has an impeccable track record of less than 0.1% NNPA. The group has invested in over 300 companies and brings a fresh perspective of granularity in the AIF industry. Manu is the founder of Centricity, a unique digital B2B2C private wealth platform that helps mutual fund distributor and wealth managers scale their business to private banking grade service through knowledge, training, digital onboarding, and analytics. Gentlemen, we are thoroughly excited to have you in the second episode of the Age of Alternates. Over to you.
Great. I think, Manu, thanks for having me on the show. And, I was curious because we have done a lot of work with Centricity so far, and you guys have a pretty unique model of working with advisors across the length and width of the country and actually empowering them to become private bankers. Yeah. How do you see this business model evolving? What kind of scale have you guys reached so far?
As far as this space is concerned and how it would evolve over a period of time, the answer truly lies in the entire length and breadth of India as a geography. I mean, just to put some numbers into perspective, as one of the reports, I think so, published by Asia Wealth, India only has roughly around 5,000 relationship managers in India. Wealth managers, not relationship managers. And imagine the kind of geographical expanse which India has and the kind of dispersion of wealth which is there. And one of the wealth management major reports said that India has 45% of its HNIs and ultra HNIs still residing in tier 2, tier 3 cities. 5,000 relationship managers is a minuscule number in front of the real opportunity which is there. So one thing has been definitely ascertained that the physical reach has its own limitation, hiring relationship managers, deputing them across geographies, locations, monitoring and everything. So the natural distribution channel, the way it has to come up in times to come is through the digital dispensation. Now, with that physical dispensation being the digital dispensation being the cornerstone of our entire strategy, we will offer greater opportunities in terms of accessing the products, executing those products digitally, and then getting it reported MISs on a one single platform. Along with that, all the distributor partners, whether it is E2E, employer to entrepreneur or an existing entrepreneur, I think so the hand-holding through the physical format is going to lead the way for them to scale their business and have better solutions offered with more specialized product and a more well-informed decision-making matrix for their investors or the users.
And I'm sure when you go to these markets, you must be seeing that while the advisors there have great client relationships, that access to products would still be quite limited given just the geographical constraints they are in. And do you see a lot of education required? Do you see a lot of engagement required to get them to showcase products from, let's say, Bombay or international products to their clients?
Before starting Centricity, the entire team traveled across length and breadth again, and believe me, what we gathered meeting all these IFAs predominantly, who was our kind of a sounding board in terms of how do we really create a proposition. The experience was such that it was unbelievable because tier 1 city, Delhi, Bombay, Pune, Calcutta is a different world altogether, and the moment you travel 150 kilometers beyond the boundaries of these cities, there is a different world exists altogether. And that is what the real India is, where there is growth happening, where there's a lot of work happening, there is a lot of opportunity. But because of the physical distribution mandate which has been followed for last 2 decades in the wealth management, these are completely unaccessed market. And because these are unaccessed, and predominantly they have been served by the mutual fund industry, which is the most evolved over last 2.5 decades. The alternate side opportunities are very, very restricted with them. But to our pleasant surprise, they were very open and receptive to know and understand what is available and how can they curate a more informed and a better solution for their clients. So, well, yes, the answer is that there is a huge opportunity. People are looking forward to it, but it is up to us to take the mandate and take it up to them and introduce product manufacturers like you, who are doing a great job in creating a kind of a distinguished opportunity for the investors to have a better risk-adjusted return onto their portfolios.
Thanks for that. I've always heard you speak about alternates as being the space where this part of India has to grow on the investment side. How have you seen acceptability of alternates as a space as a space for tier 2 advisors and distributors to grow in?
So acceptability is something where change and acceptability is a part of human nature. It is just that till the time it is not available to you, you feel that you can live without it. But the moment you get an access to it and get to know about it, it comes very naturally as a human tendency. Similarly, both of us have been born in an era where we have seen from telephones to mobile phones and how mobile phones have also evolved. So similarly, on the investment line, investments line, alternate is something which suffices a very high degree of customized requirements. And also, slightly on the technical side, I would deviate. Alternates. Mutual funds, bonds, MLT, direct equity is a great product for retail and mass market. Okay, but the moment your value of your disposable investable income increases, there is always a requirement, because your goals are different, your return expectations are different, your liquidity requirements are different, and one size doesn't fit all. So, it is very, very hard to, let's say, if there is a 5 crore portfolio, 2 crore portfolio, 10 crore portfolio, 100 crore portfolio, it is very, very difficult to really meet the ultimate goals of that kind of a capital from very limited options. So till the time you don't have the option, you have no choice but to live with it, what you have. But the moment you are given an option and an opportunity, and where the trust factor and the skill set of the fund management team comes into play, I think the acceptance level is way beyond that what we can imagine over here.
No, I agree with you. We see a very similar story playing out when we go deeper into the tier 2 markets as well. Finally, Manu, you have built a platform, a tech-first platform, which at its very core empowers your partners, which are distributors in smaller cities, to scale and grow. How have you seen this play out? So, what's been the experience in terms of the scale that some of your partners have seen through accessing your platform?
Well, on that part, there is a process which has been laid down to do it. There is nothing like we are doing anything which we feel is very crazy, and we tend to really be super smart about it. There is a very simple process which we have laid down very clearly. We understood the requirements, as I initially said, that we traveled down, we met a lot of people, and we understood the gaps. We understood what is it that they actually require, and basis the understanding, we have laid down a process. Process really takes us to a phygital model rather than a pure digital model. And in a phygital model, when you are talking about anything which is beyond the most easy product proposition, which is your mutual funds, by and large, there is a certain amount of handholding and training which is required to these people. Now, the process with us is as follows. First of all, we have a very strong product team, whose job is to basically filter down and bring the strategies on the platform. So there is a high level of due diligence which is being done, and a constant monitoring even after the execution of the investment is done, so that we are in constant interaction with the product manufacturers and the fund managers as to see how the product and the portfolio is evolving, and is it in line with the expectation or not. That in itself is a great comfort for these smaller players in tier 2, tier 3 cities, because they don't have that wherewithal. And the point which you mentioned, the institutional approach really comes into play. That is one part of it. So once we bring in the products, then we have to really train them, make them aware of the products, the pros and cons of the product, and how well it might fit into different kind of requirements. Okay, so somebody who has a very low risk appetite and somebody who really wants a return which is just about inflation, probably an alternate side is something beyond bonds and MLD. We will not go to that client. So that is something which the distributor has to understand, the fitment of all these products and offering. So training plays a very, very important role in our entire journey. Then subsequent to training, it is the due diligence, it is the local support which we are building for these people. We are already up and running in UP and Chennai, Bombay, Delhi, very soon in Bangalore. We intend to cover at least 4 more states in next 3 to 6 months. So the local support is there, while the entire thing will be managed centrally out of our HO. But the feel and the person available at any given point in time is a very important aspect of Indian human behavior, I would say, because we are a larger geography. So it is a very thought through process driven. Okay, you bring in the products, you do your due diligence, you train the people on the product, you help them monitor. If they have any queries, you manage that, and then the entire execution, reporting, MISing process is all on the digital side, which brings in a lot of operating efficiency to us as well as to our channel partners. And that all together put in as a package is a solution which we bring on to our channel partners.
Thanks, Manu and Vineet, for such a high-octane session. It was eye-opening for us to learn from you, Manu, about the potential that India's tier 2 and tier 3 cities hold in terms of contributing to the plethora of opportunities presented by the alternate, and taking us through the phenomenal work you are doing in reaching the far corners of the nation via the physical and the phygital model. Hope all of you had as much fun as we did curating the session. We look forward to hosting more of these in the future. Signing off for now. Thank you for being with us.